I think we were the first one in the world that created Bitcoin share class.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Vadim, thank you so much for joining me today. Super excited to chat with you. All right, Vadim, you're the founder and CIO of Edge Capital. Edge Capital is a leading market-neutral hedge fund that manages capital for institutional investors, leading crypto foundations, and treasuries. You guys manage over $500 million in the market-neutral strategies and are one of the largest providers of DeFi TVL in the crypto markets. Previously, you worked at the IMF, Bank of America Merrill Lynch, and at a macro hedge fund. All right, so I know it was a while back looking at your LinkedIn, but how is it IMF? Because that to me is kind of this like quasi-mysterious entity that has a major impact on our world. And you were there, I think, for like 3 years or 2 years maybe. But how was that experience?
That was fun, and don't mix the IMF with the Mission Impossible IMF. So the IMF that I was at was in Washington, D.C. So it was really a fun story. I was a student at UCLA working on my PhD, and I got a call saying like, "Vadim, do you want to join the IMF?" I'm like, "What the hell was that?" Right? So I had exactly the same question, right? So and then went through the interviews, right? So I had a relatively interesting role over them. So I was advisor to the executive director of the IMF. So I was sitting on the board of the IMF initially next to Dominic Strauss-Kahn, and then Christine Lagarde took over his role, right? So I did it for about 3 years. It was a very interesting macro role. We were trying to save the world, went through like dozens of programs for different countries, probably hundreds, I would say. That's the right number, right? So it was very focused on strategically saving the planet and everything else, right? But it was a fantastic experience, obviously, right? And fantastic connections in Washington, D.C. and globally.
That's amazing. So did they read one of your papers, or how did they find you and then ping you?
Well, I typically tell the story that they were looking for a guy who knows macro, who has PhD in macro, right? From top schools in the US. Also, because it's such a diversified organization across 180 countries, they need a Russian guy, right, with Russian origins, which I checked the box, right? So effectively, there were only like a few people who did it. So a couple other guys said no, so they took me. That's what I typically say.
Very cool. That's awesome. All right. So after that, I think you went to Bank of America Merrill Lynch. How was your experience there? And I think you were doing like emerging markets and FX. Did you discover crypto there?
I joined initially, and it was a position actually in London, right? So I moved from Washington, D.C. to London. They told me, Vadim, you'll be doing emerging market effects, rates, local and post credit. And back then they told me, Vadim, you're going to start with a country which is super boring. Nothing is going on with this. It's called Ukraine, right? So 3 months later, revolution, debt restructuring, a lot of stuff still happening on the financial side. Bank of America was one of the largest brokers that was trading securities, Ukrainian securities, right? So there was a lot of interest, a lot of connections, a lot of calls. We were working with top US funds, largest allocators on the planet. We were working we had calls from the White House, from the US government, trying to figure out what's happening. It was just started back then, in 2013, 2014. Right, so I was in the spotlight of everything that was going on, right? Then my role expanded over time, and I started doing more just wider strategy across all emerging markets, primarily focused on Eastern Europe, Africa, a little bit of Asia, a little bit of LATAM. But we never really jumped into crypto back then. It was like a little early to some extent. But at the same time, what many people tell me, that crypto is really connected to emerging markets. If you think about any type of yield farming strategies, this is cash and carry in emerging market space, right? So you always think about, if someone's paying 20% a year, there is a reason for this, right? So there are risks involved, or if someone's promising you crazy yields, this is typically connected with high volatility, right? So that's exactly what I did for a few years. It was a really cool, fantastic experience. And the team was amazing. People at Merrill Lynch were super driven. You know, it's like a classical people from the Wall Street, right? From the old days, meaning a lot of drive, a lot of interest, clearly, taking a lot of risk and so on.
Very cool. All right. So when and where did you get exposed to crypto? And I assume it was Bitcoin first, or was it like Ethereum or something?
Yeah, so it was mostly in a macro hedge fund when I was, right? So there was some experience. We were looking at this. We never traded it, right? At the fund level, because it was an institutional fund, it was a US global macro fund called Trend. So back then, when the Bitcoin started, I got some exposure myself. Pretty much it was for us as a commodity style, right? So we never really deep dive into this. So I did for about 4 years on the macro side, right? And then I said, look, I got launched my own fund. I got very successful 2019, and I'm like, I got to build something myself. And the initial idea was to launch a macro fund. And in parallel, I realized that crypto is very similar to what we do in the traditional macro space, but it has a high volatility and it has some alpha that we have at Edge Capital that does not exist in TradFi, right? Anything we do in terms of yield farming, in terms of any TVO deals, when we provide liquidity in exchange for equity, that doesn't really exist in TradFi on a big scale as we have currently, which creates you a different angle here and allows you to generate more high return for clients, B, be always on the top of technology. And the last component is just fun, right? It's a very different business. So I think what we really liked about it is that um, uh, if you think about what I did in traditional finance, if someone is promising you 20% a year on bonds, like fixed income loans, right? This is super high risk. In the US, it will be like triple C type of stuff, right? This pre-bankruptcy potential restructurings, right? These are the guys who borrow 20% a year. In crypto, if someone is paying 20% a year, they did well, right? So it's like top protocols like Athena, Azerfi, guys like this, right? Because they are so successful by bringing up capital such that they give you more tokens and you grow with them. So effectively in crypto, for high yield, you are invested in companies which are blue chips like Microsoft and Apple's in the world. But in TradFi for 20% a year, you really have to go on a very high risk scale of things. That's why I said, look, this is a game changer in my opinion. And so that's how I completely switched, right? So my interest to crypto was not through just buying Bitcoin and being in Bitcoin to live. It was the other way around. I believe in the technology in terms of what people do. B, scalability of the things we do in crypto, and C, the ability to do equity dilution at the other stages to bring to attract capital and attract retail users, right? So it doesn't really exist in traditional finance, which I think it's just purely a regulatory issue, to be frank, right? But this is a massive advantage. I loved it, and that's how we launched the fund in 2021.
Amazing. Okay, so going back to, oh, sorry, I'm hearing myself on your thing. Okay, no, it's gone now. Apologies. All right, so going back to when you first were allocating personally to Bitcoin, were you just like, oh, this is interesting, I want to put a few dollars into this, or do you have some grand thesis that, oh my gosh, this is going to change XYZ, or what was the reasoning for putting your PA into?
Yeah, I can't say it was any material allocations. It was more like, I would say, volatility trading, right? So there's no thesis that it would go to $1 million and hit like this, as many people had. With that said, there were clearly risk on risk off decisions, right? There were some structural things that were taking place. Plus, then you have like Ethereum coming up, then you have smart contracts taking place. That completely changed the narrative for us. Well, all right, this is a game changer because now you can pretty much do anything in the blockchain space using smart contracts. That was really, I would say, the structural shift that's taking place for us, and that was the reason to be invested in this.
Okay, understood. All right, so with Edge Capital, you're thinking, I want to start my own firm. There's a lot of alpha to be had here, and the opportunity here is, we can invest in blue chips with a 20% yield, or is potentially a 20% yield, which is incredible. So, when you were thinking about designing this firm, what kind of different strategies, or how do you want to architect the firm? Because like the world's your oyster, you have all these different skills and all these different ways that you could go about it. Why decide on market neutral? Why decide on we'll call it like TVL provisioning, or actually, what do you call that secondary bucket? Like
You can call it liquidity provision, so yield farming, or TVL, it's total value low. That's a very good question in terms of what you're asking. So the way we think about it, and I thought about it initially, I asked myself, I said, look, where can you generate alpha consistently, right, in terms of the yield? And there are a few dimensions how you can do this, right? So, and as like I mentioned that like 20% target yield, we made more than this historically, right? So we've had some years where we're doing like much higher yields always, right? Including last year, right? We were making like 30% plus on a net basis. So like gross was even higher, obviously, right? So that's really depends on the market. The way I thought about it and why we picked the market neutral strategy, you have a few options. We came to the conclusion that anyone can take directional risk, right? If you want to buy Bitcoin, it will be an ETF, right? You cannot run a hedge fund to buy Bitcoin, right? So because of commodity, right? Same with Ethereum, Solana, and so on. The second layer is volatility. If you want to trade tokens long short, right, like people doing equities, this is extremely difficult, right? This was an extremely difficult value proposition. And I would say I do not know many, I would say, or any successful hedge funds trading crypto back and forward, long, short, autumn, in like discretionary, right? I know some of them doing HFT, yes, different story, right? But if you take, let's say, like macro directional bets on different tokens, that's been very difficult, right? Because you don't have fundamental factors like macro factors, rates, you know, at least if you know if inflation is high, you know what's going to happen with US rates, you know what's going to happen with US equities. If dividends are high, you can calculate this. It does not exist in crypto, right? I'm measuring things based on sentiment and Twitter. That's really not a fundamental approach for me, right? So the next layer was the venture, right? So my experience, I was always working for liquid funds, right? We were trading securities, large sizes. So our goal was how can we build an institutional product, right, that consistently generates high yield? And the only thing we know is that we can generate high yield in a TradFi simply because there is alpha in digital space, which is related to token distributions, right, or different inefficiencies in the market. Some of them will stay consistently over time because you have more and more money coming, or more venture money coming to crypto. It does not exist in TradFi. For example, in TradFi, you don't have venture companies doing IPOs in a year after you do seed round. In crypto, everyone is doing this, which means you have a lot of new capital and companies coming to the market, which were very interesting. That they would require capital from the liquidity side to launch it. So that's why we said, look, from the market neutral perspective side, there is value to this as number one. So, and initially we started with a dollar share class. So we had only dollar investors, right? So we're making money dollars and dollars. And we started in 2020, 2021. Fund was launched in 2021, but we were running some SMAs before this. And it was pretty successful back then, right? So yields were extremely high. Then FTX happened, obviously, right? In 2022, the majority of my competitors pretty much shut down, outflows, everything, right? You know the story. So, but after this, we came to a conclusion. We said, look, we can actually generate yield also Bitcoin on Bitcoin, right? So, and I think we were the first one in the world that created Bitcoin share class. And as far as I know, maybe there are other funds in the world, right? But we are a commingled asset class, which we have dollars and Bitcoin investors fully commingled within the same fund, and it's separated at the admin level in terms of the yields. So it does create actually positive synergy for dollars and for Bitcoin at the same time to generate more money. If you separate it and do $1 fund and one Bitcoin fund, you make less money for both, right? So this is our thesis. So we were the first ones in the world who opened this type of Bitcoin share class about 2 years ago. So, and now we have a pretty decent portion of Bitcoin investors in the fund, plus we have Ethereum investors in the fund, we have Solana investors in the fund. We also have INJ investors in the fund, and we have some other investors in the fund, right? So we can pretty much take any liquid token. It's fully, commingled within the fund structure. It's been working relatively successfully for us because we have an edge of understanding how we can make yield token on token. So that's answering your story. So we came to the conclusion that we can generate extra yield pretty much on any environment, right? It's just a function of the environment that we can generate 30% a year or 10% a year. So the historical performance of the fund, again, this is not an investment advice, obviously, but it ranged historically from 10 to 30. Depends on the year, depends on the situation. When FTX it was all lower, last it was all higher, right, than the upper range. But we typically tell people, we said, look, if someone tells you that making 30% a year, this is this is extremely difficult to believe in, right? That's why we typically say we'll target 15 to 25. If it's a bad year, we'll make it less than this. If it's a fantastic year, we can make more than this, which we did, basically 3 out of 5 years. But structurally, we're trying to be like, very conservative, very boxed in strategy, no volatility, no drawdowns, insured, and so on. So.
Wow. Okay. So can you talk to me about how does combining the BTC and USD share classes into a singular fund, a singular entity, how does that increase the returns? And also the complexity? Like, is that just an absolute nightmare on the administrator side to deal with that?
So I'll answer the first question. It's I would say we already ironed out a lot of things on the admin side, how to reconcile everything, and we have a pretty big ops team that's been doing this. But this is definitely difficult. It took us a year to build it properly, all the systems, account, understand how to do it right, how to attribute taxes, and so on, right? This is number one. The second layer, so in terms of how you create synergies between digital share class and dollar share class. So the first element is, think about the following. I'll give you a simple example. Imagine you want to run a basis trade. Let's say you buy Ethereum and sell futures on Ethereum, right? So if you want to loop it, so there are many people doing very similar trades. You buy ETH, sell futures, right? Then you take this Ethereum, you'll stake it somewhere else, right? Or you put it as a collateral, borrow more, and leverage your position. So what happens over here? You become short futures on CME or any other exchange, right? And you receive the funding rate, right? If you receive the funding rate, you need to put collateral. If you put collateral on centralized exchanges and crypto, right? I would simplify. For example, for a $10 million position, you probably put about $3 million in stable coins as a collateral, right? So such that you don't get liquidated on 30% move. So this is your kind of precaution for this. So you're short crypto futures and you're long spot, and spot is used somewhere else on chain. In our case, if you're a Bitcoin share class, you can put Bitcoin as a margin for your futures. It means you don't need 30% collateral. You really need 20, because you belong Bitcoin short futures, so they become correlated, and it eliminates the tail risk of extremely large moves. So it actually saves you on a collateral about a third if you use crypto as a collateral trading, right? So this is number one, right? This is one example. Effectively, it benefits all investors, obviously, right? So because now you have less collateral drag, right? So the second example can be if you take a token that has a structural negative funding rate, let's say outside of Bitcoin, there are many that has negative funding on those, right? So if they bring us this token, for example, a chain launches, they have fantastic yield farming opportunities taking place, right? So, if you buy the token and short with futures, there's going to be negative hedging cost. In our case, it's different. If we accept this token as an investment in the fund, we will buy futures, right? Sell spot, take cash out. So we are effectively receiving positive carry from the funding when everyone else is paying this, right? So these are situations when it's actually becoming beneficial for us to accept the token. Usually we work with treasuries of different chains. We have a few that we work with already. Actually, not a few, a number already, that are deploying their native token with us. We'll manage this token. We will make money in dollars, right? And we'll buy the token at the end of the month, right? So basically top up the position, or we'll send them dollars from our US bank account back to the account, right? If we have to. Right, but overall, there are tokens with negative funding rate that also benefit other investors in this case, and that's also synergetic because you become short, let's say, tokens that you receive positive funding, and you are long futures on other tokens, which is again minimizes your risk of liquidation, which means you need less collateral, which means it's synergetic to everyone, right? But with that said, I do not recommend other funds doing this. It's a lot of operational headache.
Yeah, I mean, first of all, that's incredible. Second of all, I can't even imagine, right? Because we operate a venture fund at our firm, and we also have a smaller like trading-esque vehicle, and that's difficult for us to get a handle on. And in the trading fund, we're doing some more esoteric NFT type things, which is that's where it gets kind of difficult on the admin side. But I mean, what you're talking about is orders of magnitude more difficult. But it sounds like you have a great ops team, and have been doing this for quite some time. So it's easy for you guys now.
Yeah, so yeah, we already closed about 2 years of statements and digital share classes. The statements show you, let's say, Bitcoin, and it's going to be yield in Bitcoin, balance in Bitcoin, and so on, right? But yeah, we issued more than a couple of dozens of those already. So on a monthly basis, yes.
This market neutral strategy, how many sub strategies does this overall market neutral strategy? How many sub strategies are contained within this?
Yep. So that's a very good question. So we typically think about a few blocks, right? But they're all interconnected, right, to some extent. I'll give you a few examples. So in terms of what can be done. Generally, we're looking to make money in any shape or form if we can make money in market neutral fashion. So the first block would be simply TVL provisions, or so-called liquidity provision, total value locked, which means we will supply capital in exchange for tokens, right? We did a few dozen of deals already on the private side, when you effectively supporting the company, help them to take off, right? Receive some natural yield. Clearly, we have to believe in a team, right? We have to understand what they do. We'll generate natural yield plus some tokens on the top, the equity, right? So this is one block. The second block would be yield farming. Yield farming is very similar to TVL provisions, except it's fully liquid, right? You get paid almost right away. It might be locked tokens, but you are not starting very early. Usually, yield farming is very popular on bigger protocols or protocols that they launch and trying to subsidize liquidity and scale it up. The third block would be a form of basis trading, right? Any type of basis trades across centralized exchanges, decentralized exchanges. It is all market neutral. And the last component, you can sometimes blend yield farming and basis trading, which means if you use your Ethereum for restaking, for example, right, and you also hedge it on the top, effectively, you at the same time receive funding plus on the top of this, you also get yield farming, right? So, for example, imagine you have restaking on Ethereum on IO layer, right? From different companies. So you gotta buy ETH, sell futures on this, hedges. So you do receive funding plus you're getting some extra rewards on top of this. So we did I would say different types of trades. We did more than, I would say, more than 150 different types of yield farming slash TVO deals over the past 4 years. It's a blend of liquid strategies, different pools, dozens of different pools on Curve, Uniswap, plus private deals on TVL side, plus a bunch of players on basis trading. But that's why typically we're looking for the strategies that are fully market neutral. We don't really do HFT market making, things like this, right? Because you will be taking direction risk, right? Even short term, we don't do long short, we don't pick tokens. This is, I would say, let's just do only one thing, but do it really well.
Very cool. Okay, so with your portfolio construction within this broader strategy, I assume the allocations per strategy are dynamic. I assume it's not, okay, we're going to do 25% for each one of these 4 buckets. Is it dynamic? And then if so, how are you deciding where to allocate, or what is the trigger that says, okay, we need to move from our TVL provisioning over to the basis trade or whichever strategy?
Yep. So it's very dynamic with a balance sometimes almost every day, right? So it's very opportunistic. I would say the right answer is it really depends on opportunities. For example, sometimes basis is very low. You can make money. Sure, we'll do TVL provision, yield farming, and so on. Put money in some credit markets. If basis widens, we'll switch immediately, put money in basis trades, right? Lever it up, right? We have both set up, everything is pretty much automated in this respect, right? And we can do, in a day, we can do $500 million of positions like this, right? If we have to, right? And we did before, right? So it's not really a problem. The next question becomes, it's also a function of the deal flow. If we do TVL deals, right? You really want to select good TVL deals. Sometimes there are not many. Sometimes we'll pass on a number, right? Sometimes we just fully invested. It really depends on the environment, but we're usually very, very flexible in terms of how we operate, right? And, TVL deals that we usually do, we have deals that lasted for a few months, and we had deals that lasted for, almost 2 years, right? On a restaking, especially with some of our partners, right? It's just like it's still making money. We're happy. It's still profitable. That's why would they rotate anywhere, right? And clearly there is cost of rotation. There is type 1 staking and so on. There is cost of hedging and there's also risk profile, right?
All right. So I want to talk or dig deeper into the TVL provisioning side. How are you sourcing these different deals, and how are you identifying if these founders are, gonna abscond with the capital and go? It's all on chain, so that's not really a huge issue. But how do you determine whether or not they're good actors, and then like smart people that will achieve what they're setting out to achieve?
Yeah, this is the core risk in terms of the strategy that we run. You can invest money and then they don't take off, right? And they never issue a token, you get your capital back, but the value of the token will be nothing. So you make like 5% a year initial yield and there's no upside, right? So that's why our goal is A, to find very good deals, B, believe in a team, C, understand their business development strategy. And actually, the last component, do all due diligence on them as well. So on the due diligence side, generally, first of all, there is a lot of research taking place, basically. Is it a viable protocol? What are they doing? How they do this? The second one is security, right? Understanding if the audits are done properly. We do our own audits and security assessment. We work with a few firms that is doing an extra layer of understanding in terms of what can be changed, done, and so on. So we're very paranoid about this, right? In terms of who can change the smart contracts, who's fully multi-sig, what the servers are. So we did a lot of technical work on pretty much on every single protocol we invest money, right, so far. The third layer is we do due diligence on the team, right? So we have external companies that do like extra due diligence for us, and in certain cases we're going to do background checks. We use one company that does background checks for the U.S. government. They're doing it for us as well. So if we really want to go deep, right, we pretty much go deep, right? The next component becomes clearly references, right? References from people about these companies. Usually when they come to the market, they're backed by a few VCs who we know, right? They're backed by people in the industry we know, right? So you really want to avoid a situation of some scam, right? That some guys like randomly come into you and ask for money. Clearly, we want to make sure that the cap table has a few big names on it, right? We will clearly check with a bunch of partners. So it's a lot of BD reference check work, a lot of understanding what they can do. And the last component clearly boils down already to founders, right? Usually when they come to the market asking for TVO, they already fundraise some money from top VCs, right? So they're really successful at that point, right? So the next is just a push for them to take off. Look at examples of like Athena, Etherfi, Eigenlayer, right? Kill, Renzo, Morpho, and a bunch of other guys who did really successful work on during the start of Hyperliquid, for example, right? So usually at that point, they're already big, they're scaling really fast. Like Resolve is one of them that is launching right now. In fact, we just launched, and Treehouse. So all these guys, they're very credible people. Then you think about, is it the right product fit, right? Do they have enough business development? And the last component is called the cycle, right? If we're in a bear market, it's very hard to take off, right? No matter how much capital you put in, it's very hard to make money. So as an example, for example, after FTX, there were almost no TVO deals, and yield farm was very low, token valuations were low. Everything was very, very, very slow. Now it's a completely different situation, right? In 2024, for example, there were like dozens of good big TVO names, right? So if you look at the big companies like Athena, Athena, Eigenlayer, Etherfi, probably the winners, right, in terms of market cap, more than $1 billion companies, right, all super successful. Athena, I think, I believe, just went almost $15 billion valuation, right? So it's a complete insanity, and then you realize there is a reason for this, right? So people always ask me, well, why are these crypto valuations are crazy, right? And then we say, well, look, we don't think they are. There were certain cases we didn't believe in a company that it would be so valuable, but then they go to crazy valuations. In some cases, we thought that the value of $3 billion, they come up at low valuations, right? But I think a simple example that we tell people about Aave, right? I'm like, look at Aave, right? They charge about 1% spread between borrow and deposit rate, right? So that goes to the treasury. And they have $50 billion. So these guys are making, I'll simplify, roughly $500 million a year in revenue, right? Fully automated smart contract, right? That's why if you make it right, you can scale it and make a lot of money. Look at Athena, right? So they almost reached $10 billion in assets. They are making money. They're a super profitable business, right? And it's fully scalable globally. So this is the reason the valuations of crypto can be extremely high, extremely fast. And we're looking to capitalize on those offers. But this is a combination of understanding the product, understanding what they do, the team, if they're the first ones on the market to do this. and how fast they can take off.
All right, so I guess when you're digging deep on these teams, they've essentially they've gone through a lot of filters before. They've raised capital. Generally speaking, they've already built a product. They need that kind of final push, as you mentioned, in order to kind of scale the product. But you mentioned business development as a skill or something that they need really in order to succeed. Can you? I want to double click on that component, because when I hear that, I'm like, okay, well, do they really need BD if they have you guys and then maybe a few other firms similar to you guys who are providing liquidity and they have these great backers? Like, in your opinion, do they need that mass retail adoption in order for the product to really take off in a major way and that token to accrue more value?
In our opinion, it's very important, right? The way we typically think about it, we say, why is everyone else not launching another audit, right? It's very easy to do. You can fork it and build it. You do have forks, you have competitors, right? But there are none of them that are that big. Why? Because you have a global adoption that took place, right? That's why we really want to invest in companies that we can jumpstart, and then everyone else is using them, right? So look at Athena. There was a jumpstart with decent amount of capital, and then everyone starts using them. It became effectively a to-go stable coin for basis trades, right? Same as Resolve, right? They're taking off right now, but there are a dozen of other competitors who cannot just bring TBL and adoption. So for us, we effectively tell all the companies we invest in is that our goal is to jumpstart, help you grow, but you need to figure out your product development, and you have to figure out your own business development, bring retail, bring user adoption, right? Because we're a hedge fund, right? We're here to help you, but we have cost of capital because we're responsible for our investors, right? So our goal is to provide you capital for the shorter period of time, the better for you, because you spend less money in terms of cost. B, the better you perform, the better for us, because your token will be more valuable. That's why we provide a lot of advice to them in terms of how to do it better, how to build the ecosystem, how to construct the TVO program. So they minimize the amount of tokens they dilute to other people, and on the other hand, we help them do all the connections possible. We'll connect them to all other TBO providers whom we know in the US and in Europe, right? And everywhere else, right? We'll provide them with advice how to do it better, more efficient. But the rest is still like advertisement. BD is on that, right? So, and this is, I think, this is 100% is a critical factor, because what I typically tell people, I have not seen companies shutting down because they had too many sales or too much revenue coming, right? So it's usually the other way around, right? That's why the BD element is important. Influencers are important. It's still crypto, right? And user adoption is important. It can be a fantastic product, but people don't understand it. They're not going to use it.
How many Aave-like successes can crypto markets handle? Or like, I'm thinking, if 10 years in the future, are there going to be like 5 of these major DeFi protocols that kind of do these certain functions? Or in your opinion, are there going to be 100 plus and they're all going to do one specific thing really well and cheaply?
That's a very good question. The short answer is I don't know. Only thing I know is that in each sector, we usually see one big player, and there's a second one which can be half of the size of the first one, and maybe the third one, and that's pretty much it, right? You can see it in lending business, right? Automated lending business like Aave competitors. B, you can see it basis trade business like Athena data competitors. You can see it in DEXs, right? So you have all the couple that everyone is using. And then you can say same will be insurance, other products, right? Like OTC leverage. There are a few big ones, fantastic players, right? And there are other scale bolts, infrastructures, exactly the same. So effectively, you would have, it's usually like 3 big players, right? One leader that took over the market, and that's pretty much it. In terms of how many of them will have, look, the way we think about it, it's just a replacement of TradFi. Everything that you have in traditional finance will be on crypto rails soon, right? So the ideal scenario is that you do all the payments in crypto, everything is automated, right? You don't have to wait for your bank to open in the morning to send a wire, right? You don't have to wait for 2 days to settle. You don't need to use Venmo, Zelle and have all these limits on it, right? When you send money, right? So this is all will be automated and expanded in digital space. So there's no real limit, right, in terms of what can be done, because you can see banks, you can see wealth management institutions on chain, you can see tokenized real estate, pretty much anything, right? So how many of them will be? I think many at some point, as long as you have more adoption taking place. Plus, I think the advantage of what we do in blockchain is fully verifiable, right? You can verify all the transactions, payments, everything else. It massively minimizes any fraud, any, let's say, fake statements and other stuff. With AI, now everyone can make your fake transactions, fake confirmations, and all these things. Good luck with crypto, right? You cannot create a fake blockchain block, right? So it's impossible. Everything else it will be clearly, will be affected from the security perspective. That's why I think the blockchain has much more capacity going forward. The last component is AI, obviously, right? So there are a few big players coming to the industry. You can look at guys like Zero G. It's an AI-based blockchain, right? It's like super fast. They should be launching actually at the end of this month or next month, right? So this is extremely important because you need rails for payments for AI agents, right? And you need rails for communication that can be done through blockchain. So all these things will require more, let's say, new companies, new protocols, new things that will be living on blockchain space, and they will grow. We just don't know it yet, right? If you think about what happened, even the past, let's see, in the past year and a half, we would never think about risk taking. We would never think about basis trades like Athena. We would never think about more for lending markets, right? So like a few years ago. And 10 years ago, we would never think about sophisticated smart contracts, right, that we currently use.
Yeah, no, it's really crazy to think about the addressable market here because, as you mentioned, it's kind of where it's all of TradFi, which TradFi is absolutely gigantic, and so the amount and types and number of structured products that can be created in the future when we have more assets trading on chain, real estate or whatever, it's gonna be crazy. It's really exciting for you specifically because the addressable market for you is just like that doesn't end. What are some things that are not yet some, like, we'll call them DeFi type protocols or DeFi products that don't exist yet, but when more traditional assets are traded on chain, what are some things that you've thought about? You're like, oh my gosh, I'm so excited for blank to come out in the future. Whatever, I don't know, like mortgages on chain or whatever. Like, what are some things that you're pumped about?
Yep. So there are a few. I would say I'll tell you what we see is coming and what we like, and I'll say what we're excited about, right? So we see a lot of stuff coming on the lending side. This is just a digital infrastructure, basically under collateralized loans, right? So financing that you have in TradFi, right? This is fantastic. Then credit cards backed by crypto, like Etherfi is doing it. Athena is probably looking to do one. A bunch of other guys is doing it. This is another big thing. So payments in crypto, right? For hotels, for airline tickets, for everything. We have one company we invested called Antravel is doing it, which is, if you think about it, only with hotels and airline tickets, you don't need KYC on your crypto because you'll show your passport when you check in the hotel, right? So this is effectively eliminates all this, KYC payment issues immediately, and it's fully automated. So this is all working really cool, right? This is very efficient and it's really fast. What we're excited about, I'm most excited about any AI applications that we'll be using on the blockchain space because it becomes very, very scalable and fast, right? So this is, I think, one of the things that is like to be done, right? But this is a big movement that is moving in this direction, right? Because you can have AI doing payments in TradFi across multiple countries through banks. Banks will never integrate AI, right, for payments. It's a little difficult, I would say, to do like API payments through banks, right? It's possible, but it's not straightforward. Crypto, very simple, right? So in terms of, like, imagine you tell a smart contract to pay these guys, and do these transactions, right? So this is all happening. I think we're at very early stage right now, but we see a number of companies doing this. And the next layer for us that will be important, that we're excited about, is cross-chain communication, right? So everything needs to be seamless, really fast, right? So this is not done yet. Last component is about RWA, real-world assets. I think this is just an access question, right? So like if you live in developed countries, this is easy. You just send a wire payment and you buy real estate, right? But or piece of real estate or fractional portion of it. If you live in emerging markets, right, it's much more difficult. That's why all these things will be improved. The last component, which I like about what we do in crypto, is that I've seen so many crises in emerging markets. It's complete insane, right? Look at countries like Ukraine, Argentina has another debt restructuring, right? So a bunch of like Russia currency devaluations, right? That's taking place in these countries, right? So clearly, crypto solves it. It gives you an access to a payment system which has stable rails, right? If you invest in Bitcoin, you never need to invest in your local currency ever again. That devalues from by 10x when something goes wrong, right? And this is a problem for many countries in Africa, some countries in Latin America, and so on. So this is effectively allows you in these countries. It allows you to get access to a developed financial system in developed markets really easily, really fast, without any capital controls and so on, right? So this is the most amazing part, and I think the whole world is pretty much working on it right now.
Very cool. All right, so I want to go back to the fund strategy a little bit. So, risk management. I would imagine a good amount of the assets are, they're locked up in a protocol, or maybe they're on an exchange or something like that. So, are you managing risk purely via, well, of course, like you're hedging and whatnot, but also from like the hacking standpoint? Like if an exchange gets hacked, a protocol gets hacked, is that purely like a sizing question? Like, okay, we're going to only put this position as 5% just in case something, the worst happens and they get hacked, or how are you looking at risk management broadly?
That's a very good question. So we spent a lot of time doing this, and pretty much my whole career was about risk managing the portfolio and taking risk. So what we typically tell people is, number one, we are paid to take risk. We can lose money, right? So period. This is part of the strategy. There is no risk-free strategy that is making you 30% a year. It doesn't exist, right? So what we clearly have tiers of different protocols. We have tiers of exposure. We have risk limits. Depends on the orders of the position of the protocol, how big the protocol is, a history, risk assessment of this, right? So based on this, we have clear ratings in terms of limits and exposures, right? This is pretty strict when we, let's say, when we pass those limits. For example, some protocol has Ethereum position in it, right? Ethereum grows up, you're above the risk limit, let's say like 10% of assets. I'll simplify, right? We have a risk control in a company. We immediately have a risk committee call, and we take a decision what to do. So short answer, you have to limit your positions no matter what, right? Why? Because I've seen so many things happening when you don't expect them to happen, right? I'll give you a few examples, right? So we, in my first big loss in my previous career was related to trading Italian rates, right? So like we were trading rates, and they usually go from 0 to 10 basis points, right? So historically, so one day they went from 5 basis points to 150 in Italy, right? We lost not tens of millions. We lost more than $100 million on the fund, I believe. I don't remember the exact number, but it was a big number. Some crazy stuff that took place. We lost a bunch of money on this. And I realized, and be like, it should have happened, right? But back then Italy was trying to leave the European Union. And that was an example when things you don't expect to happen can happen, right? It's just part of it. Right? So many things in TradFi happen, we didn't plan them to happen. US elections, you don't expect certain presidents to win, they do win, right? It's a lot of unpredictable things. Same in crypto, same with hacks, right? So hacks are unpredictable. You can believe that this protocol will not get hacked, it still happens, right? So we've seen these cases, for example, Curve, right? You don't think Curve would get hacked. In August last year, it was hacked for one small pool, right? If you remember, right? And it has nothing to do with Curve. It was an issue with the language that they used, with Viper language that wasn't graded properly. So there are a lot of things that we're seeing that are not supposed to happen. So what we do in this case, first of all, it's risk limits, clearly per position, per protocol, in terms of how we, rate them and so on. Number two, there are some risks of cross correlation between them, right? So generally they are small because it's a non-correlated risks, which is, if you are buying, let's say, if you are trading emerging market currencies, either they all sell off, they also sell off, right? In crypto, it's not really the case. If one protocol is hacked, that doesn't mean the second will get hacked. Number two, we buy insurance. I think we're one of the largest insurance purchasers in the world against hacks. So we've been doing it consistently, systemically. We have risk limits in terms of how we think about it, right? Actually, right now, we're structuring first ever TradFi insurance for smart contract coverage, right? So it's done with 5 companies out of London, right? 5 insurance companies that are staking us the position in terms of we should expand the coverage period and everything, right? So hopefully we'll close this relatively soon. So this is just part of the risk that we say, listen, we know things we don't know. You have to mentally accept it. So you have to pay for the cost of this and move on. The third level is exposure on centralized exchanges like FTX, right? So FTX type of situation is mitigatable currently. You can use external custody for things like this, right? You can use Caprox layer loop. You can use Firebox external custody. There are a few other solutions, right, that allow you to hold assets outside of the exchange. And I think clearly the industry changed so much that you really get an assessment that these tier one exchanges are very stable, very solid, right? You have no concerns about it. For us, we also have risk assessment in terms of the exchanges, and we don't trade even on tier two exchanges. Tier three, never touch it. So for that reason, we're pretty much careful, but we still also monitor the exposure. If we need to add insurance, we'll buy more insurance, right? But with that said, we always know that something will happen. We just don't know when, right? So it might not happen next year. It might not happen in 5 years. But statistically, it might be a situation that something will get hacked, something will go wrong, right? And we'll lose money. So that's why it's a lot of time spent on a risk management positions, exposures, right? Plus risk reward always, right? So if the protocols make a lot of money, can we size it up? What are the risks here? What extra we need to know about the protocol to give more clarity? In some cases, for example, Hyperliquid, right? They have fully closed code, right? So we use one company in Switzerland that is doing orders. They did an incredible job. We analyzed everything possible on a binary code level. We found where the servers are, we understand who holds multi-sigs, everything, right? Pretty much, even if the code is closed, right? So, but this is type of stuff normal people, normal funds don't do, but we do it as part of our due diligence and in terms of risk assessment. So short answer, we know we convert uncertainty into risk, right? Parameters in terms of how we assess it. So most people just take here, stake there, they don't care. Most people use Aave, no one buys insurance. We are buying insurance on Aave. People tell us, you guys are crazy, why are you buying insurance on Aave? I said, all right. So, but because when Aave is hacked, I don't want to lose a substantial portion of my assets, right? Can it get hacked? Everything can happen, right? Theoretically, you can hack MPC technology, everything else, right? It didn't happen before. It didn't. It doesn't mean it won't, but we're pretty much consistent in terms of the exposures and how much insurance we spend on it. But it's part of the strategy, basically.
Are you currently capital constrained in your strategies or in the way that you go about deploying capital, or like what are the constraints? Could you, if you got $1 billion additional today in capital to deploy, could you deploy that over the course of some period of time, like easily, or would that be extremely difficult?
3 days, yes.
Really?
Yeah. So we don't really have capacity constraints, right? Why? Because all the top protocols we invest money in, they're multi-billion-dollar protocols, right? So imagine you have $1 billion, you have 20 positions. It means $50 million each. 50 million for Aave is nothing. 50 million for Ethereum is very small. 50 million for basis trading is very small, right? So that's why even if we use leverage, we're not really capacity constrained overall, because all the protocols that require TDL, the more that you give them, the better, right? So usually you're talking about, you remember when Ethereum was starting, they pretty much said, look, we're not going to take Zoom calls unless you give us $50 million to start, right? So because they want to bring $1 billion at a launch. That's why I would say, the majority of the trades are not for the capacity constraint. There are some clearly capacity constraint, but we don't have issues, let's say, with guys like the trade HFT, right? There's like massive capacity constraint, very clear capacity constraints. We don't really have these concerns. Basis trades, all scalable, right? Very scalable. So we're talking about probably $50 billion capacity in basis trades. That's currently in place. Only Ethereum is $10 billion doing this, right? That's why you can run large numbers over here. That's why I don't really think $1 billion would really limit us much.
What's your benchmark, and how do you think about alpha decay within your strategies?
That's a real good question. So there is not really a benchmark in terms of where we are. Usually we compare ourselves with two things, right? There is clearly macro funds that run macro strategies, right? So we don't really compare ourselves with the funds who run the directional risk. It doesn't really matter, right? Because people tell us, oh, guys, Bitcoin made so much money. And I'm like, well, you should invest in directional risk yourself, right? But if you want to run liquid market neutral strategies, talk to us, right? It's a completely different risk profile because people like making money, but no one likes losing money, right? So that's why we run it in a different scale, and we also make money in Bitcoin and Bitcoin on the top of this. So usually for those, you have some benchmark in the sense that um, you have an indication of average yields across macro funds, market neutral funds, right? For Bitcoin yield, this is very difficult because your risk-free rate is zero, right? And no one's really making money on Bitcoin. Even like 5% a year Bitcoin on Bitcoin is a fantastic value proposition if it's very low risk. But even this doesn't exist. There is no 5% Bitcoin on Bitcoin without risk. It doesn't exist, right? So we make way more than this, right? Way more than we did. But we also are very cognizant of the fact that, we don't want to overpromise, which we never do, right? And then under deliver. The third component would be Ethereum, right? In Ethereum share class, you clearly have normal staking yield, right? Plus some extra premium, you can make money on top of this. If staking rate is 3%, so, some of those are making like 5%, 6% a year ETH. But they are taking risk. And what we say actually, it's less and less yield, which is like, easy to grab, right? Obviously, because there is too much capital spread out across a small group of protocols. In terms of alpha decay, it's hard to say there is alpha decay in terms of what we do. The function of our yield is twofold. Number one, if crypto is doing well, we'll make money, right? If more venture money come into crypto, you have more protocols coming, we'll make more money. So we didn't do well in the years when the market was frozen, right? FTX happened, no venture money coming, no tokens, no yield. Sure, we'll make 10% a year in this type of cases, right? There is still some initial yield. When the market is growing, venture money is coming to the system. We genuinely have opportunities, right? So that's why we frankly see more venture money coming right now. Everyone is launching venture funds, right? So these companies will require capital going forward. That's why it actually expands the universe of investment opportunities for us materially, right? And number three, some companies that do token dilution as a subsidy, their valuations went up a lot recently, right after the U.S. elections. So this is all helping. So that's why I would say there is alpha decay on HFT side. Markets got very competitive. Let's say cross-exchange spot arb already doesn't exist, right? We never did it because it's HFT, you got to take directional risk. Cross-exchange perp arb almost doesn't exist either because there are like 500 hedge funds doing this, right? But let's say if you do DeFi and CeFi, there are still opportunities how you can utilize it. There will be some alpha decay in this part of the strategy over the next couple of years. In TVO deals, liquidity provisions, it's a lot of work. I would say we have a lot of experience doing this. This is not that simple. You cannot just jump into the market and say, "Oh, I run TVO deals," right? This is not straightforward, to be honest. That's why I don't think competition really would be squeezing us out. It's the other way around, because the more people come into these deals, the better for us. Because if the company launches with us and we give out simplifier, we give like $30 million investment, right? We want 10 other companies to give them 30 million, right? So such that they will start at least with 300. The more money they get, the higher the token value, right? The more money they generate, the better for us and for everyone else. So it's actually good for us if more companies doing TDO deals, because it will help the projects to take off, make more money, and have high token valuation. So we'll all generate yield for clients in this case.
Are you guys also doing venture investments in like the early stages?
Yeah, well, we're currently launching a venture fund. So we realize that it's extremely synergetic to know the companies for a longer period of time, right? So generally, we have an excellent BD team, and the venture arm that we are launching is extremely synergetic to the core business, because now we see more companies at the early stages. We're talking to hundreds of companies a quarter, right, in terms of venture deals. And those who take off and do require TVO in the future, we already have a track record. We know what they did, we know how they took off, we spoke to them for a long time, and so on. So this fund should be launched in the next few months. I have two partners on this fund that will be with us. But this is this, I would say, initially will be a small vehicle for close partners, friends, and family, right? So relatively small in the sense that we could get into very good deals as angels, because we also have a lot of added value on top of this.
Very cool. And also, I read on your website you guys are one of the largest borrowers. So, could you describe to me your activity in the borrowing area?
So look, for us, we like leverage, right? So, and we like leverage, which is not a crazy leverage that increases risk. We like leverage to make money. I'll give you a simple example, right? So if people tell us like we would invest money on say at 12, 15% a year, they're like, well, this is too low, right? I'm like, but it's low risk. I'm like, how do you make like 30% a year in this case? It's very simple. It's called leverage. If I can invest at 12, 15 and borrow at 6, just lever it up 3 times, you'll make 25, right? So that's why I better go with the low yielding, low risk projects and lever them up instead of going to super high risky projects without leverage, right? So if you think about it, this is a model in TradFi, right? In TradFi, there is a lot of leveraged loans, cost of leverage is cheap, people make money. We do exactly the same. We work with a few companies on leverage side. We do OTC deals with brokers, right? So we borrow from some of them. Number two, we do private OTC deals with companies like Maple Finance, with Arcus, with August, with Terra Finance, and a few others, right? And of course, one of the biggest advantages what we've been doing recently, we are borrowing from Aave more for Compound than other guys, and Euler, right? So I think we're one of the largest borrowers from Aave, right? We do different shapes and forms of loop trades. I think at the peak we did like $1.5 billion. So we're very close with Aave, but it depends on the trade, right? We like simple trades that generate yield with low risk and with large leverage, right? So clearly the risk you run on Aave is that the cost of borrow can jump, right? Because rates are not fixed. So that's why when we negotiate with private lenders, it's a little bit easier because you can lock your rate for the next 2 months. On average, it can change overnight.
Makes sense. Very cool. All right. So tell me about the conversations you have with LPs. Like when you're, I assume that they're pretty aware of crypto, most of them, and they're looking for something that's more yield focused, or maybe they don't know crypto at all. And also, like, is there, I don't know, is there something that surprised you about when you're going out to raise something that's you're like, oh, I can't believe these LPs are asking this question. It's not really that relevant, or maybe just tell me about the whole kind of experience.
Yeah, we have almost carried 50 LPs in the fund, right? And it's a wide range. I would say we have a lot of funds that invest with us, right? I would say pretty much almost every crypto market hero fund funds is our investor currently, right? As far as we know, right? So across the big ones. We also have crypto foundations that invest with us, right? A few big names I involve. We have banks invest with us, crypto, non-crypto, right? Some of them TradFi. We actually do have some venture companies deploying their capital as a cash management strategy, right? Because we run a liquid strategy, making money on a monthly basis. You can always come in and out. That's why it's convenient for them. We also have early stage companies that fundraise money before they launch, deploying their cash with us. We have some. Think about the treasury management strategy, right? So in terms of conversations, they were very different, right? So we had people coming from TradFi who are extremely smart in bunch of macro managers, have seen things going on all the time, right? So it's very sophisticated conversations. We had conversations when people tell us, we don't believe that you guys are making so much money. And I cannot convince them we don't, because we're fully audited, fully regulated, right? So we have fund administrator, we have auditors on the fund. So everything is verified and checked, and they still don't believe it. I'm like, oh, just put some money in and you'll see it, right? So we have people like this, very, very critical. We have also crypto whales that invest crypto with us, Bitcoin, Ethereum, Solana. So this is, they also ask a lot of tough questions, right? How you manage risk, how you understand it, and so on. So usually people are pretty sophisticated when they take this type of decisions, right? But I think now there is a big wave of new investors coming in, right? Well, after the US elections, right? So all Europeans are putting more money and so on, right? So in terms of interesting conversations, as I say, we really, I think, moved to a phase when people really know what people do in crypto space, right? I think most of them do a lot of parallels with TradFi, right? So cash on carry trades, exactly do the same in crypto, right? Option trading, you can do it in crypto and on TradFi. Yield farming and liquidity provisions, it's a form of convertible loans, right? With equity kickers, basically. That's exactly the parallel how people think about it, right? And now you have more and more people coming from TradFi to crypto, which simplifies the conversation. Explanation what we do, how we think risk, how we think custody risk, how we think about exchange risk, and so on, right? So this market will only grow.
Very cool. All right. So your team, what are you looking for in when you're building out your team? Like, what type of skill sets, what type of backgrounds? Are they more crypto native? Are they more TradFi native? And yeah, how many people are on the team? Like, where are they based? Like, give me kind of the overview.
It's a very good question. So we have multiple lines of business. We clearly have a market neutral funds, plus we run vaults on chain, right? We curate vaults on chain, and we have a venture arm. So total across three legs of the business, about 35 people. So there are few blocks. There is an investment team that taking investment decisions, right? There's some mostly crypto natives with experience in either in DeFi and crypto, plus Solidity code and smart contracts technical skill set, right? There is development team, right? That's basic programmers that do bots execution, everything else, right? There is a BD team that is communicating with clients, investors, and also potential deals, right? There is also a legal team. I think legal team, we have two in-house legal counsels currently, which is very unusual for crypto hedge funds, right? But for us, we realize we do a lot of private deals, a lot of legal agreements, which help us a lot in terms of basically closing the deals. It saves a lot of money to investors. That's why we have a relatively senior person who joined us about a year ago, and that's been one of the best decisions so far. Basically, make sure on the legal side everything is done properly, right? Because we do there are no standard conditions, and we have a lot of experience building it. Like for example, TVO deals, TVO agreements that we do. They're very new, right? So lawyers don't really know them, right? They don't know technicalities. We know we didn't a lot of them already, so we know what can go wrong and so on. What else? The team that does the smart contracts is called Ultra Yield. If you see Ultra Yield by Edge Capital, that's us. This is a vault curator. So this is a lot of technical stuff over there. Clearly, both valuation, how you run risk over there. It's slightly different than the hedge fund business because it's very technical from the perspective of building all smart contracts, valuation of assets, right? Automation of processes. So this is more like a DeFi project, right? So, but conditional that we're experts in terms of what we do on the wealth management side. And venture team, we have a few people on the venture side. These are clearly like my partner, Seni, his former Credit Suisse, a lot of experience doing venture for the past 8 years. So this is a type of a skill set you cannot build. You must know these things, right? So from the past such that you could assess venture deals. In terms of selection of people, look, we have a blend of TradFi and DeFi, right? So I would say on the ops side, we realized ops and execution is better for us to bring people from TradFi. So, for example, I have a big team of Russian speakers from SocGen that basically expats from Russia, right? So it's SocGen, they're all bankers from the past, back office operations, right? But they're extremely good, right? So clearly all of them reallocated either to Dubai, Georgia, Argentina, Bali, Eastern Europe, Cyprus, London, places like this, right? But this is a TradFi experience that allows us to run the back office properly, right? Because people in DeFi and crypto, they're not really, operationally focused. Everything is done through your wallet and smart contracts, pretty straightforward, right? On the investment side, it's clearly focused on experience in terms of what you build, but we really have our own DNA in terms of how we build it, in terms of how we think about risk. No one really has it really in the industry, so we can't really hire a person that will say, "Oh, this guy is it's easily switchable." It's not like the market is not that big, and there is all in-house alpha that we generate so far. That's why teaching people is actually easier and bring them in-house instead of finding someone who already knows all these things, right? So, but in terms of narratives, I think again, I rarely hear it, but I do hear from my guys, and they tell me we really like working. Team is really cool. So, and some of them worked in the past in their previous careers in the banking sector, right? So this is great, right? So when I hear things like this, of course they probably lie for half of this or the majority of this, but even if it's half of this is true, so this is really valuable, right? And also, look, we grew up a lot as a team. It's a lot of work going on. We're trying to minimize stress, right? So that's why the lower the stress, the better. If it's not a fit, just do something else. That's how we typically think about it, right? But I think everyone in the team works a lot. We're pretty much 7 days a week. Lately, we try to give people flexibility time. But when something blows up on Friday night, you have to wake up, basically, right? So, and this is normal. Everyone treats it as is, right? So this is like a bigger picture overview in terms of how we think about it.
Very cool. All right. 10 years from now, where is Edge Capital?
That's a very good question, right? So the vision that we have is multi-level, right? So you want to see it as a big financial institution, right? That does everything in crypto, right? So it's expansion of credit business, brokerage, everything else, right? Our goal is really to set up and build the next layer of rails, right? What can be done. I'm coming from TradFi. I'm very familiar with people doing TradFi. The amount of capital in TradFi is really like unlimited relative to what we have in crypto, right? That's why we are pretty much pioneers in terms of what we do in the digital space. That's why the goal is to scale it up. That's why you see we're building multiple lines of business right now already, such that we can expand. Everything what we do is extremely synergetic to the core business, right? Venture, super synergetic. Bolts, super synergetic, right? So BD on both sides, super synergetic. That's why we can expand it further, right? We're doing it step by step, right? So as I said, we grew up our assets a lot. We're very selective in terms of people. We're doing this very slowly, right? So in terms of hiring new people, very selectively, it's usually like, we pick one person out of 500 resumes, right? Something like this. So that's why we'll get to the level when it will grow organically to a certain level that it's a multi-level financial institution that has multiple things what we do. But every time we want to do it in a way that we generate alpha, we must have an edge in something. That's why the company is called Edge Capital, because if you don't have an edge, just don't do this.
Love it. All right. Before the closing questions, I want to jump into some big picture kind of questions that I have. DATs, the digital asset treasury companies. What are your thoughts here? That there's some folks that say DATs are going to cause next crash. Some folks say that they're great because they give institutional investors easy access to these different tokens and whatnot. What are your general thoughts on digital asset treasury companies?
Look, I think everyone who is saying all these things is right to some extent, right? So the way we think about it is a lot of smart people went to do this, right? It's just another layer of access and additional leverage that they create. I don't think there is a fundamentally huge value in them, meaning like they are not creating anything new, right? They're just providing better access, right? I think good example can be Grayscale Trust that was converted into the ETF. If you look historically, it traded with a discount, initially with premium, then with a discount, right? That's pretty much the same, right? MicroStrategy is a fantastic example, very stable, liquid, and so on. So I think this is effectively an easy access to all the crypto products that we have, right? So it's number one. Number two, they should trade with a premium because some of them will start generating basically yield on the assets. One of the value propositions, we're speaking to a couple of them because we can make money basically Bitcoin on Bitcoin, ETH on ETH, Solana on Solana, right? So the first treasury that starts making 5% yield Bitcoin on Bitcoin will have massively higher valuation. That's simply a company that doesn't have it, right? So and we see. And they can do leverage. That's another big thing, right? So and access. And I think at the end of the day, we'll end up having like 5 or 10 of them, which will be much bigger than everyone else, right? Big players in the industry, super liquid, tradable, and so on. Can they create another crash? They for sure will, right? Simply by definition of what they do, right? Well, if you think about it, you're buying assets. Now Ethereum went up a lot, in our opinion, based on our research. Is primarily because of that, buying assets, right? So acquiring. So imagine there will be some crypto winter at some point. This is part of our strategy. It cannot go up, right, without going down consistently. So when this will take place, in fact, what's going to happen is that the equity holders who trade shares on Nasdaq or in Europe, right, they will be selling those. So that will be the point when your asset value is actually above your market value of the company. So the company can arb it out. They can, buy back the stock and sell the assets on the balance sheet. So that would lead to an escalation of the sell-off to some extent, right? So if you think about it in the way that Ethereum went up so much so fast, if you unwind it at least partially, it will happen. As of now, we think most of the assets will not be sold on the market. We spoke to dozens of companies in the past. So far, they do not have intention to sell the initial assets, right? They just buy the assets so far, right? And if they trade at the discount, they might not care. So that's why can it create a crash? Maybe, but it's unlikely because there is no liquidation risk here, right? It's not like, all of them 10x levered, and it would create a massive liquidation risk. If you look at the centralized exchanges, right, at the top 10, there is massive amount of open interest and leverage in these positions, right? This is way more risky than digital asset treasuries. They just sit on spot, and they typically tell clients that we're not going to sell our assets ever, right? Like MicroStrategy. So it can be some waves over here, but I think just the overall crypto leverage is much more riskier than this, and this is just has a big move up, right? But the next layer is clearly some people don't want to run and buy some like L1 token, right, on the market and hold it themselves. They just want to log into their Fidelity account and buy directly. That's pretty much what they're simplifying. And if you do it in the right way with leverage and also generate yield on the top of this, fantastic. People love it, right? So it's simplification. Think about it as like, why we buy ETFs in the US, right? You can just buy 500 stocks, right? Well, because it's just simpler, period, right? Is it efficient? Well, there are slippages between the spot and the stocks, right? Themselves between the network. It's just simpler. This is exactly the same thing, right? You don't need to find a hedge fund or fund of funds, pay the fees, buy a stock. It will generate extra yield. You have full directional risk.
Very cool. All right, so stables. Everyone's very bullish on stables. I think stables are going to play a huge role in the future of just finance globally. What's the best way to make money within that? Knowing stables are going to be the future.
Yeah, it's a very good question. I think this is extremely difficult to make money because stables themselves don't generate any money, right? It's effectively a form of expensive custody, right? If you buy Tether, for example, you're effectively paying 4% a year to hold USDT, right? Because they effectively generate the yield. But that said, it gives you full flexibility on payments across the world, across the whole planet, right? You can pay anyone, fully transparent, and so on. So effectively, you have a few currencies that are big ones. USDC, Tether, clearly, like Ripple is coming, and so on. Generally, this is a payment. It's a method of payment for us, right? So it's just a method of transfer of wealth, cross-border payments, remittances, everything else, right? How to make money on this? It's very difficult. I don't have an answer how to make money on stables. So we got to take risks. I think companies who will do this, they will be very successful because on the one hand, if you are saving money, just simply compare cost of wire payments and time on this. You pay like from $15 to $40 to make a wire payment. It takes from 2 hours to 2 days to send, sometimes 4 days to send money from the US to Europe and back. This is complete disaster, and also they can lose your wire payment, right? Something is not settled. Then you have some cycles you need to wait for the bank to approve it. Once this is all cleared out, it's much easier to do it in stablecoins, right? So this is another. Are we willing to pay money for this payments? 100%. Because imagine companies do require, they're paying, let's say 15-20% for working capital cost, right? To borrow from banks to do faster settlements. Why do you need this? Just do it in stablecoins. That would create a natural demand that will pay for this, and it will create extra yield for everyone, right? So from that perspective, that makes total sense, right? So that stablecoin companies will generate money. That's why Circle had a fantastic IPO, right, on the market. Tether is clearly generating a lot of money as well. XRP Ripple is doing fantastic as well because of the remittances and other payments. So this is all I will say. That's a great business that is just simplifying the payment system. But how to make money of this? Well, invest money in hedge funds, right? So,
all right, Vadim, this has been incredible. It's time for the rapid fire closing questions. All right. What is your favorite L1 and you cannot choose Bitcoin?
I would say I have two. One is Solana, second is Injective.
Injective. Wait, can you just touch on that quickly?
Sure. So Injective is a chain. We're very close with them. They have super fast exchange called Helix, right? So this guy is expanded into EVM wrapper. The founder, Eric, was just named Forbes 30 under 30, I believe, a couple of weeks ago, right? So these guys are doing an incredible job.
Very cool. I need to do more research on that. That's very interesting. All right. What is the best investment advice you've ever received?
That's a very good question, right? So I think one answer, so I got two. One says diversify, and the second one says be concentrated. So outside of this, I've been managing myself. So
Don't they say that if you want to generate wealth, you need to concentrate, your portfolio heavily, and if you want to maintain your wealth, you actually diversify? Isn't that the kind of the?
They say a lot of things. They tell you do 60-40, and then you buy US rates, lose a bunch of money on the 10-year duration when rates go up. That's why my experience is like, don't listen to anyone, take your own investment decision, do the assessment, do your work. This is the best investment advice I get. So,
I love it. All right. How has being an entrepreneur changed you as a person?
completely different lifestyle. On the one hand, is freedom. On the other hand, this for the past 5 years were like extremely, probably the hardest years in my life building the business, right? And it's constant, but it's fun. I love it.
Awesome. All right. You could go back in time and give yourself one piece of advice before launching your firm. What would that piece of advice be?
Launch it 10 years earlier.
Oh, I like that. I like that. All right. What is your most contrarian opinion that you have in the crypto space right now?
Most contrarian opinion. Make sure you have a lot of shorts when everyone is buying.
I like it. I like it. All right. Last question. What is one piece of content, whether it be a book, blog, podcast, movie, etc., that had a major impact on your life?
Well, I think one of them was about sales, right? So I read the book by Grant Cardone. He has a few, right? One is called 10X, and the second one is called Sell or Be Sold. Grant is incredible. He has a lot of sales skills. That's how I learned that building the business and building a relationship is extremely important, right? And it's about effort. So that book changed my life from the business perspective primarily.
Amazing. Vadim, thank you. This has been incredible. Where can people learn more about yourself and learn more about Edge Capital?
You can go to our website, right? So edgecapital.xyz. You can go to our LinkedIn page. You can reach out to our BD team. There are multiple options. We're not hiding. We're pretty open.
Amazing. Thank you so much.
Thank you so much, Andrew. Appreciate it.